315 trillion, that's not a typo. That's the staggering mountain of debt the US owes right now, more than triple the entire world's annual economic output. It's a debt so massive it's hard to even imagine, and it's getting heavier every day. But why should you care? Because this debt crisis isn't just numbers on a screen, it could crush the American economy, your savings, and your future. Let's break down what this $315 trillion debt really means. First, a quick reality check. This number includes government debt, corporate debt, mortgage debt, and consumer debt combined. It's the full picture of what America owes to banks, investors, foreign countries, even future generations. When debt grows too big, interest payments become a monstrous burden. In 2025 alone, the US government will spend hundreds of billions just paying interest, money that could have gone to schools, infrastructure, or healthcare. But rising interest rates make it worse. The Federal Reserve has been hiking rates to fight inflation, but that means borrowing costs skyrocket. Every dollar borrowed costs more, squeezing budgets tighter than ever. Now add inflation into the mix. Inflation reduces the purchasing power of your paycheck, but it also increases the cost of servicing debt. More inflation means the government needs to pay even more to cover interest, leaving less for everything else. So what happens if this debt balloon bursts? Experts warn of scenarios ranging from soaring interest rates, crushing inflation, to a full-blown financial meltdown. Defaults? Unlikely, but the ripple effects could shake global markets. The US dollar's role as the world's reserve currency is also at stake. If confidence erodes, foreign countries might dump dollar assets, triggering a currency crisis and skyrocketing import prices. Small businesses and everyday Americans could feel the pinch first. Higher taxes, reduced government spending, and tougher borrowing conditions might slow economic growth, leading to layoffs and reduced consumer spending. Wealth inequality could worsen as economic hardship hits the middle and lower classes hardest. The rich might survive, but the rest could face a real financial squeeze. But is there a silver lining? The US economy is resilient and innovative. Historically, America has found ways to adapt, whether through technological breakthroughs, policy changes, or global partnerships. Debt crises aren't new. Think of the 2008 financial crash or the Great Depression. Each time America fought back with bold moves. Yet, ignoring this growing debt pile is not an option. Fiscal discipline, smarter spending, and long-term planning are critical to avoid disaster. So, will the $315 trillion debt crush the US economy? It's a looming threat, no doubt about that. But with the right moves, America might just dodge the worst. Your financial future depends on watching these developments closely. Because when trillions hang in the balance, every decision matters.